What's going on, guys? It's your boy EJ the Trader here. And guys, I hate to say this, I hate to be the layer of bad news, but you guys have been lied to again about trading, and now I gotta expose the actual truth. And based on what you see in the title, yes, risk management is pointless if you don't understand where the direction of the market is going. You don't understand price action. You guys have been lied to again, so I'm gonna have to expose the truth, and I'm gonna feed y'all some knowledge and some game. All right, let's go. All right, so risk management does not matter unless you know price action. Now, I'm not saying risk management is not important. Still keep on managing your risk. Please manage your risk, because I don't want anybody to get blown out the water and lose all their money. That's not a great thing at all. But here's the thing too. When you don't understand the direction of where the market is going, what's the point? You understand that, okay, I know where to manage my risk at. I know I shouldn't lose so much money. I know I shouldn't be losing this much. But if you don't understand where the direction of the market is going, what's the point? Now, let me just tell y'all this, and let me just say this for y'all. Risk management protects you from your profits and it protects you from your losses, but that doesn't mean that you know exactly where price action is going to go. Price action is one of the most important things. I'm not going to say it's number one important thing, but it is one of the top most important things to understand in trading. Because with no direction, we don't trade. With no charts, we're not trading. If there was no charts, there would be no traders. Traders would not even exist. Heck, probably not even investors would exist at this point. So in order to understand this, you have to understand whether if the chart is going up, whether the chart is going down, whether if it's choppy, it's in a range side to side. All that stuff has to do with price action. Where direction is going, where you discover your higher lows and higher highs, your lower highs and lower lows. That's all price action. Now, price action all starts with candlesticks or lines if you do lines, but I don't know if anybody's doing that. If you do that, hey, kudos to you, but I do candlesticks. That's what I do. Candlesticks are price action. And then when you look at it an overall standpoint, you zoom out, that's price action. How do you know where the direction of the market is going? By using multiple time frames. So the 1 hour, the 2 hour, 4 hour, week, month, all that. That's where you discover where the market is going. Where direction is it going to go? And of course, you need to understand where structure is. Structure basically is your supply and your demand. Supply and demand is all the same. It's the same as support and resistance. So like your supply is your resistance. Your demand is your support. Same old deal. Now, in order to understand these directions with structure, this all goes together. I'm going to get to that right now. You need to understand exactly, okay, if it's going up, but then it goes up here to this supply zone or this resistance zone, you know that you have to short it. Or if it doesn't, or if it does pass it, you know to do longs from there. Once it breaks that structure, wait for that retest, go up from there. That's all price action. You're reading exactly what the market is doing, and you're reading it by candles, you're reading it by structure, you're reading it by where it's gonna go. Higher lows, higher highs, lower lows. That's all what price action is. Now, let's give you an example right here. You could be in a trade right now. Let's say you wanted to manage, let's say you bought NVIDIA. Sorry about that, y'all, my camera cut off. But let's say you bought NVIDIA at 129. You only wanted to risk $1 at 128. It's just an example. Just giving you an example. I don't know how much you would lose exactly because it's based on spreads, based on the options, based on how much is this, how much is that, or how many it's all just complicated, but we'll explain it in the next video. Let's say you only wanted to risk $1, right? Okay, you got in for a call. Let's say you said you wanted to go up. You don't know what the pre-market high is. You don't know what the pre-market low is. You don't know the overall direction. You don't know the overall sentiment. You're just taking it. You just know that, or you think in your mind it's going to go up. But overall, you didn't really chart nothing. You don't understand where the direction of where it's going to go because you didn't base it off multiple other time frames. You didn't zoom out to know, okay, this will probably go up. Okay, this will probably go down. So I probably need to just step back and I need to really evaluate this before I just start taking it. So the thing is, guys, you have your risk management, but if you don't understand price action, it doesn't matter. Because at the end of the day, all this stuff reacts differently. Everything reacts differently off of sentiment, structure, buyers and sellers, everything. Now, again, I'm not saying risk management is not important. Risk management is very important. Please use a risk management. Please use a stop loss, please. Because that's the only thing that we have control over. We have control over risk management, but we do not have control over how price action is going to go. We have control over risk management, but we do not have control of how the market's going to be. The market can be choppy all throughout the day. We don't have control over that. We have no control if the market goes up. We have no control if the market goes down. All we can do as traders is manage risk. And now again, I would say the best thing y'all can do in order to understand this is by journaling, is by trading, practicing, manage your risk well, because at the end of the day, that's the only thing we can control as traders, not price action, not the structures. We can't control structures. We just gotta chart to where it is and chart where exactly do we think it's gonna go or where we think it can go. That's the only thing that we can do. All we can do is react, and all we can do is manage our risk. So keep that in mind. Now, this is pretty much the marathon, not the race. And I gotta say this every time. It's a marathon, not a race. Do not rush this process. If you don't understand price action right away, it's okay. Get y'all a mentor. Ask questions. Look this up. Look it up on ChatGPT. Do YouTube. There's plenty of resources out there in trading. Understand what price action is before you start really understanding risk management, because everything in risking is a little different. You may get wicked out. You may get stopped out. It's okay. You got the thing that you can control most, and that's risk management. You can't control price action. All you can do is graph, chart, make sure everything is there, make sure you know exactly where the direction is. Most of the work comes from behind the scenes. 90% of your work comes from behind the scenes. 10% comes from you actually trading. I won't say about 80%, but 90-10, I would say. 90% comes from behind the scenes, 10% goes into when the market is open and you're trading. Okay. So that's going to include the video for today, guys. Thank you guys for watching. If you're new here, make sure you guys like, comment, share, subscribe to this video. I will be doing these every week. I'm going to be doing a lot of shorts to keep y'all updated on what I'm going to be talking about. Yeah, and we will see you guys in the next video. Peace.